All right. Good morning, everybody. Hey, we made it to Friday. We've got some mixed headlines. Most of the chips are down, but Intel's up since they got a sugar daddy now. UNH news looks like Berkshire picking up a lot of it on the cheap. First hurricane in the season is being spotted. They're talking about possible category F3, F4, or whatever the hurricane numbers they use. And we've got the Russia meeting today. I think the president is supposed to take off shortly, be flying over to the meeting. SPX Gamma Flip is basically the cog line, 63.32. Once we're through with OpEx, we'll have more freedom in price action. That's another way of talking about the guardrails, right? We've been talking about that all week, how we've got so much positioning built on each side of the range that it would likely hold us in place until after OpEx. Now, on Monday, I did warn that if we broke the range early, then we would break the guardrails and it wouldn't matter. We wouldn't need to wait for OpEx. We could just run because they would have already been broken. So they took Lennar, United Health, and they dumped Bank of America, which they have been unloading that for over a year. Apple, Charter, Communications, I think AT&T was in there, or T-Mobile, something like that. And Applied Materials got whacked. So we had a pretty wide discrepancy in price on the overnight. A lot of times when I look at the indexes in the morning in the pre-market, I'm focused on their percent change, right? The NASDAQ being up like a 0.5% with the ES at a half, that kind of thing, the percentages. And when we get stands out, like we've had recently, it's usually small caps in the last 2 weeks, 3 weeks, small caps being up more in the pre-market or down more, really outperforming in either direction, everybody else in the pre-market. Today it was the Dow that was up the most, and the Nasdaq and the S&P a lot of times are moving in sync, right? They're both up a quarter, they're both up a half, but the Nasdaq is in the red and the S&P, well, I mean, these numbers were further apart than they are now, but the S&P is sitting at less than a quarter, but still it's in the green. Japan flat, China flat. China had a lot of news. They're going to focus on their failing money supply routes, shipping, getting away from domestic again, trying to go global. So there was a whole publication that they came out with today. Probably take a week to read the darn thing, about how they're going to change what they're doing, trying to go back to the failed system that they keep trying that doesn't work. So watch the China names: Baba, Baidu, JD, PDD, XPEV, Neo, EDU, all those guys. At 8:30, we're going to get the retail sales and import numbers. Nothing's really far off here. If we had really wide numbers, I would be more concerned about the 8:30 data print. this sentiment one at 10 a.m., I'm not a big fan of the sentiment or survey datas. It's all BS anyways, and a lot of times you can tie it back to the political leanings. So plus the numbers aren't far apart. Either way, you want to keep your eye on the clock. This is one of those weird ones. Instead of it being on a half hour or a new hour, it's on the quarter hour for these two. Still keep your eye on the clock, 8:30, 9:15, 10 a.m. And when we're done with that at 10 a.m., that pretty much wraps us up. We don't have much else to focus on when it comes to data on the table. After that, we're going to be focused on whatever we get out of the Russia meeting and just gotcha headlines, right? There was a comment yesterday by Bissett talking about the strategic Bitcoin reserves. I went looking for the government page on that, right? Because you can see the strategic oil reserves, strategic gas reserves. You can even see grain reserves, right? You cannot see the government's Bitcoin reserves, but it is Bitcoin, right? So track down the address, should be able to see it. They were selling, and now they're kind of normalizing, and they said they're not going to be buying anymore. They'll just be acquiring through seizures and forfeit, right? Because they got criminals out doing bad things, and then they seize their assets and they grow their Bitcoin stash that way. But I'm going to try to dig in on that some more, try to get some clarity on how to track the government's holdings and activities with Bitcoin, a little more transparency. But looking for another leg up, basically, is what I was getting out of that, is that there won't be any more selling pressure for a while, at least from that direction. The meeting is supposed to take place at 3:30, kind of late in the day anyways, trading on a Friday in power hour. Not my jam. Really could be just a quiet Friday. Oh, and they're starting to unwind the potential rate cut that they started to price in earlier this week, which is why we started to get weakness, which we talked about after they started to ramp it up, right? It was like, that's kind of getting ahead of things. We didn't have any real reason to believe there was going to be a cut. The put wall rolled back down, so it's no longer right underneath our feet, like way down here somewhere. Way. We've got the call wall just overhead, 65.22. We got 65.09, which is pretty close to 65.11 cog line. If we think about this structure and then the breakout, so we are there, right? We did the thing. It doesn't really owe us any more than that, especially for the week. If we do happen to fade back today, we have the 4-period daily moving average. That is the line in the sand, this white line here. Got into it yesterday, held as structure, and we're holding above it so far today. So if we do get some weakness and start to fade back, 64.57, well, let's round that up and say 64.58 would be a nice structural level. And That would be this previous high back here. And then we got the 4-period moving average of 64.79. The gap close play worked really well yesterday. Hopefully you guys got to take advantage of that. And we got it closed by around 10:30 or 11 o'clock. You know, watching the clock is really important. It's one of the best indicators, and we all have it, right? It's free. It doesn't cost you anything. Just look at your watch. I mean, you're trading on a computer. It's got a clock right there. I thought, wait. Half back lines up with 64.72. That's for the that's not the right one. Hold up. That was for the gap close. 64.74. So if we break the 4-period, we have that structure. And then under that, we got the volatility trigger. We can tighten everything up and just use the RTH. That would give us 64.79. We already had 64.79. That's the 4-period daily moving average. So now we've got multiple levels of support down here. It's the half back of yesterday's RTH, and it's the 4-period daily moving average. If we can break back below 6,500 again, because we already did that, then we can challenge 64.92 cog line, which is what we bounced on here around 5:30. That was a really nice play. Nice candle pattern too. That was day done for me. If we fail that, then we've got the half back and the 4, and below that volatility trigger, then RTH low, then all of yesterday's low, level by level by level. 65,000 in the overnight volume. It's just good, clean, average spot. We're not too high, not too low, kind of Goldilocks there. So all good. What are y'all going to do this weekend? Something good? Trying to keep getting the bike out before things get nasty. You know, it's coming. It's going to get nasty, but it's been so hot. Not much fun cruising 80 miles an hour when it's 108. Feel like you're getting sandblasted. We are slightly closer to the upper ADR than we are the lower ADR. But we gave a lot of that back already, and the day is half done. So if we can break our own Globex high, touching grass all weekend. I like that. Absolutely nothing wrong with that. If I had the grandbabies all weekend, that's what I would be doing too. Pick a shady park and hang out. But grandbabies next weekend, they're having birthdays. So if we can get through our own Globex high, 65.20 basically is the ADR half on the upside. We have a market maker move today, but look, guys, it's OpEx. And while we didn't see that every day this week like I expected that we would, there's no reason to believe today that this is for any other reason other than the fact that it's OpEx. That there's no data today that warrants the market maker move showing up, right? If they're hedging, we wouldn't understand why, right? If there was CPI, PPI, non-farm payroll, some reason to hedge, that would be different. We don't really have anything for them to be hedging. So maybe they are. Can't say that they're not. But base case, we're only seeing the market maker move because it's OpEx today. So keep your eye on it. If it continues to grow through the day, something's wrong. Otherwise, it should fade off because its life is only today, right? It would be gone by the end of the day. It expires. So we expect either this is an event and we're going to, rise up to that event and then it'll fade off, or it'll just fade off without rising any higher. today's floor pivot is lower than yesterday's. That's bearish. Price opened above it. That's bullish. Those two kind of cancel each other out. So far, it's an MDP. That's a missed daily pivot. It's really simple in its logic, right? This is a daily pivot and we haven't hit it, MDP. But it doesn't count until the end of the day when we look back and say, yep, we never did hit that thing today. Until the day ends, we don't know that we could at some point go down and hit it. So it doesn't count until the day is done. Once that happens, say on Monday, we would look back and say we had an MDP on Friday. We would count that as the first one and look to see if we can get consecutive MDPs. If you want to know more about that as a strategy or just using it for analysis, go to Google and type in missed daily pivots, or go to YouTube and do the same thing. And you'll find a guy that made a bunch of videos on it, talked about it, really did a lot of research, and then you'll have a better idea of it. I don't trade the strategy personally, but I do use it in analysis. Because of the moves that we've had, it is worth looking at the SNR lines for the daily pivot. You can see that we made R1 and we was not able to keep it. So if we did get up to our own Globex high and break above, that would be breaking R1, and we would expect to go to R2, 65.22. On the other hand, there is a concept that talks about getting from R1 to S2, which is not even showing, it'd be way down there. It'd be below 64.50. If we had gone to S1, we could focus on getting to R2, but we didn't go that way, right? We went the other way. There is a little bit of bias if you look at how far we are from R1 and you look at how far we are from S1. That line is longer. The floor pivots are still pointing to the upside as a higher probability than going to the downside. Resistance is farther away, support is closer. So if we break our own Globex low, get through the floor pivot, target S1. S2 would require a complete breakout of yesterday's range and expand into 64.32 cog line down yonder. R1 to S2. There's no reason to expect we're going to get that today, right? We would need something negative. We've been talking about all week how all we had to do is make it through OpEx. Just maintain our dignity, keep the range, don't give anything up, and go quietly into the close on Friday. That's it. We're not asking for much, right? So now that we've made it to Friday and we didn't have a big sell-off, everything's holding cool, then we need to keep that. It does make you wonder, at what point would we just call it a wash? Spot Gamma just came out with their AM notes. You'll get a chance to read it before I do. Let me get it downloaded and published. Maybe they have some insight. They use the SPX in their note, and they're looking for 6,500 today. The SPX really couldn't get above, call it 75 yesterday and 80 this week. So 6,500, it'd be this R2 up here. That's what Spot Gamma has They're looking for it to tag 6,500 today, like a gravity point. And then they're looking at VIX call spreads and SPX put spreads. Now they are talking their book because at the end of July, they were calling for clients to buy 6,500 calls back in, like July 28, July 30, and SMH calls back then too. So now they're saying that's what they expect to hit to wash out OpEx. If you're long those calls, you're probably going to want to clean those profits today. So I shared that in the chat. That way you get a chance to read it. They've got another publication. I don't know if you guys know about that. It's really subtle. You have to kind of dig around on their website for it. They email it to you around 8:30 in the morning. It is comprehensive. It does like a deep dive on the previous day's unusual options activity. I'll try to get the name of it for you. It's free too. It doesn't cost you anything. Even if you're not a client of Spot Gamma, you can sign up for it and get it, which is fantastic, right? Because you got to be a member to get the founder's note, which is why I share it all the time, because it would suck to have to get for you to get a subscription there just to read the founder's note. Anyways, detour, seen a squirrel, something shiny. All right, so we've got a really clear distribution up here, 64.82. Then it gets shallow around the 64.50 and builds back out at the 64.11 cog line. So that is our safety net today. If we do begin to break down, we expect to still hold above 6,400 going into the close. If I was looking for some really cheap Friday YOLO, it would be something to the upside, way out of the money, and to the downside, way out of the money. Rather than trying to pinpoint what price of strike you should choose, just look at how much money it's going to cost you and keep moving out of the money on the put side and the call side until you find one cheap enough that you're willing to lose all of what you're about to buy. And then buy that. The reason I say both is because if Spot Gamma is right and we do run up and tag 65 today, that very likely could be the wash right there, right? We get there, we get the move done, and then it just rinses out after that. Of course, we could get there today and then wash it next week too. This distribution is a mess. The lines that I have drawn right now are from the daily, and it's that big U shape, right? This U shape here. So when we come back over and we look at that, look at the volume distributions. Here's the halfback and all of that structure. There's the 786 and all of that, which is actually where the point of control is. And then the 123 and the 111, which is the LZ and the OCC, and that big distribution up there. It's not a coincidence, right? Mark out those levels for a reason. This point of control is not going to move unless we build out a new level or we wipe these candles out. And this is the candles that we've got to wipe out. We're not going to get there until like Wednesday or Thursday of next week. And then we'd have to wipe them out. So we're talking about, Thursday into Friday. So it's not going to move from removing the liquidity off of the measurement. The only other reason it would move is because we hang out in one spot long enough that by default, it just gets brought up to our location. So we're looking for 64.82 as the new point of control, simply by us hanging out here, filling it in. To do that, we've got to go back down into 64.82. We're above it right now. So break 65, get back down into 64.80, and we can bring this point of control up so that on Monday when we come in and we're looking at this, that's where we're at. Yeah, flow patrol. Thank you. That's exactly what it's called. I couldn't remember it, right? For the life of me, it's just right there on the tip of my tongue, and I couldn't remember. It's called flow patrol, guys. So if you, I think you can just Google it and find the link that way. If not, I will hunt down their join link and you can join with that. It is an email and it shows up. Oh, is it only until September? Still, it's free until September, right? Take it and run. It's like half a month that you can get it for free. I didn't know they had a deadline on how long it was going to be free, but it's pretty cool, but it is comprehensive and you really have to understand what the hell it's talking about. I tested it for the understanding part. I gave it to Grok and asked Grok to read it to me or to explain it to me, to give me its insights, and it did a really good job at that. And my sole purpose was that I know a lot of people don't understand the options language, right? The whole talk. So you don't have to. Just take the PDF and give it to one of the AIs and ask it to interpret all of that for you and give you the takeaways, which is cool because it had trade ideas and it's a really cool document. You check it out. They do sector analysis and just all sorts of stuff. All right, this morning we've got a really wild distribution as well. 64.92 cog line, 6,500, and then 65.05 or 6. This triple distribution level here. It's nasty, right? We don't have a classic shape. We've got work being put in all over the place, and all things considered, and it's not the widest range we've ever seen, but it's not a very narrow range, and it's not a really long range, and it's not useful at this point. If all of this volume was like collectively across the top or across the bottom, that would have given us more insight. Or if it was just your classic distribution, just your classic D shape with the point of control, that would have been fine. But this triple level of distribution, there's nothing here of value that we can use with that. So GTFO, we got to get out of the range. And then whichever way we go, it's what we got, right? Now, because it's Friday, we have a preview of next week's range. And every Friday, I like to measure what we had this week and compare it to the projections for next week. The thing is to keep in mind, what we're seeing for next week is not locked in stone yet. It's going to move all day with us. The gray line is where price is. So as price moves up and down, so does the gray line. And then the green and red lines are going to expand and contract with volatility through the day. And at the end of the day, once the markets have settled and they've quit moving, usually like 15 after or 30 after, then they get locked, like all of these previous lines are locked, and then it won't move anymore. But we get a bit of a preview for what's on the table for next week. And if the range is exceptionally bigger or smaller than the range that we had in our previous week or in the current week, then we kind of know that they're doing something. right? Or that they're worried about something. Next week's range at the moment is just slightly smaller than the range that we had this week. And this was, kind of a pretty boring week, all things considered, but we had OpEx and, jobs data and CPI, PPI, and we had this narrow range. The thing is, this narrow range that we had in our current week was really small compared to the week we had before, right? This big week. And if we compare that big week to what's coming next week, it's still really small. So was this big week the outlier, or are these small weeks the outlier? Well, we can kind of just go back. That's a narrow week. That's narrow, right? You get the idea. That's narrow. So this one big wide week was the outlier, and otherwise we've been getting a lot of narrow range weeks. And that's what we have on the table for next week, is another narrow range week. No expectation of a market that's going to really break out and run, unless or until we have a reason to, right? So next week, home builders, housing, building permits. We're going to get the minutes of the FOMC. I always see people screw this up. It's not FOMC next week, right? It's just getting minutes from the FOMC meeting. Job numbers, flash PMI, U.S. leading economic indicators, and then, well, nothing for next Friday. All right, so we don't really have anything big next week, except for the job numbers. I mean, the jobs right now, just anything to do with jobs and housing. Housing and can hit the yields, so we could see some shenanigans in like the 30-year, but nothing really big, right? And I don't think Spot Gamma had anything listed either. 820 VIX expiration. Okay, well, I mean that's a biggie. So next week we do have VIX expiry. That'll be on Wednesday. And Jackson Hole on the 23rd, but that's Saturday. So we would expect Powell to be talking Friday and Jackson Hole Friday or Monday. I'll have to dig into that. The reason it matters, it's kind of sneaky, but if they think there's something really big on the table, the range will be narrow. I know that may be counterintuitive, especially for new traders, but this range is derived by options trades that were already put on. It's looking at those and trying to gauge what are traders doing. If traders are scared and they expect volatility, the range will be a lot wider. And if they're not scared or they don't expect a lot of volatility, then the range will be more narrow. Big events like FOMC, CPI, non-farm payrolls, those are volatility suppressing events. It suppresses volatility. We get a narrow range going into that week. I know you may not think of it that way, right? FOMC is volatility suppressing. But on Monday and Tuesday before FOMC, we usually see a lot of people sitting on their hands, not really getting into new positions, closing trades out because they're expecting big, violent volatility moves on Wednesday. So Monday and Tuesday, they kind of clean house and sit out. So this narrow range for next week, on the face of it, we look at it and say, well, they must not be expecting anything, or it would be wide. There would be a lot of volatility priced into it. We need to look at it the other way around. They may be expecting something pretty serious next week, which is why it's narrow. That we could sit on our hands Monday and Tuesday while we're waiting on data, or while we're waiting on the VIX to expire on Wednesday, and Jackson Hole on Friday, and job numbers on Thursday. The VIX is down. Chips are down, but not Intel. China's down. The Mag 7 down volume is down. Yeah, I know. Double negative, which makes a positive, by the way, if you're not hip on your math. And looking at what's up, China, healthcare, Bitcoin, which, that was the reason I posted last night about the strategic Bitcoin reserves and them saying they were done selling. And then China again, Mag 7 up volume, China again. Banks are up, but not enough. They're moving in the right direction. Metals and mining, precious metals, they're up, not enough. Finance, consumer discretionary, miners, they need more, right? So they're moving in the right direction. We just need to get more out of them. Crude and silver are down, but gold miners are up. Uranium, Bitcoin, healthcare, yeah, all of them. The big ones that are standing out is China and Bitcoin and Mag 7, which is fantastic, right? Those three alone were good. The problem is we don't have chips other than Intel. So either chips stop falling, which is really all we need them to do, and or start rising, which would really give us some boost. It's hard to see that we're going to get that breakout that we're looking for today. If chips come around and we do start to see them rise, we can get our breakout. If we break out without chips, it could be a forced buy or a grind higher. It'd be hard to spot that, right? The breadth won't be there. You won't have the tick levels. C tick and trend may be off, but you can just play the next candle. Otherwise, the expectation is we go sideways into the close on Friday, and we just try to keep what we took without giving anything back. So as it always is, we have to get out of the range. We got our Globex high. We have our Globex low. Get out of that to do anything else. And if we do get out of it, you've already got the upside targets. I gave them earlier, and you got the downside targets. So it doesn't matter what we get. We're ready for it. The base case argument for today is that we stay within the range that we've already developed, whether it's the Globex range or all of yesterday's range, and that we just go into the close today within this. But if we do break out and we don't flip on the 111, which is my expectation of what we're going to do is flip the 111. If we don't flip there, then we'll break out with a run and we'll watch the SPX, like Spot Gamma said. Watch this to get to 6,500 and see if that ends the run, right? Because if this is what everybody's trying to get and then we get there, that could shut everything down. It could end the run in the Mag 7, the S&P, the NASDAQ, all of it could just end once we get here. And it's not to the tick, to the penny 6,500. We could easily overshoot into like 6,511 cog line or something like that. But we're not expecting, a 6,532 cog line or something like that. We're not looking that high up. At least I'm not yet. $64.81 is the 1, 2, 3, 6. 64.92 cog line is 50% of the breakout. And 100% of yesterday's range would get us into 65.06.5. So that's what I got for you guys. Be careful, be safe, watch the clock, enjoy your weekend. I'll see y'all next week.